welcome to the Dragons, Gazelles, and Unicorns podcast in conjunction with the Global Health Innovation Challenge webinar series. I'm Rosemary Truman. I'm the founder and CEO of the Center for Advancing Innovation, and I'm also the founder and CEO at the company called Ignite Social Impact, a crowd equity platform where you all could raise up to $5 million. I'm here to graciously welcome Katherine Ritchie on the podcast and for this webinar. She has an incredible and inspirational background with regards to building capital architectures. When I say capital architecture, I mean there's the angel rounds, there are the venture capital rounds, but there's more to it about the architecture, and there's many ways to actually identify where the capital is and how to engage exactly with those audiences that have it. But she's brilliant as it relates to building capital architectures for entrepreneurs and companies. And she's had leadership positions at Nottingham Spirk. She led their family office, and that's a very exciting company if you haven't seen it before, with the expertise in design and manufacturing. Lots of things, as I remember your story to me, Katherine, which you can elaborate on. Nottingham Spirk is very good at building lots of things that need to be optimally designed in a very quick and efficient manner. And also she's the head, Katherine Ritchie is also the head of TEDCO Venture Capital. And she's one of the people I admire the most for her generosity and open-mindedness in helping scale budding entrepreneurs. So I'm just very, very grateful, Katherine, for your time today.
Well, thank you. It's great to be here again. And I love talking to you, and you have a fascinating background. And it's just fun to get together and share notes, and happy to be here today Nottingham Spirk is from Cleveland. Good. You picked that up. Very good. Yes. So glad to be here.
Thank you, Katherine. Would it be possible for you to share a little bit about your background and your journey?
Absolutely. So it's funny because I've come full circle. I'm back in Maryland. So I actually was born in New York City. Grew up in Maryland, though. My parents came down here. They were actually both scientists at NIH. So that's why we moved here to Maryland. So my parents were Canadian. I know someone said they were from Canada. So anyway, just full circle. So I grew up here in Maryland, and my mom actually was a part of she was a NIH scientist, but she and her boss actually spun out and did a biotech firm. So when I was in junior high, my mom was working for a biotech firm and a startup and VC money. And I was like, what is that? No idea. Right. Anyway, so I had exposure very early on. And it was so fascinating to me because I didn't quite understand, because my mom was working for the government, and I used to visit her in a lab, and then she was working for this startup in biotech. So anyway, I had always been kind of interested in investing in finance, not science. Unfortunately, my mom and dad were disappointed, but I was like, what is this, investing? And so I would read, Newsweek magazine when I was younger and try to understand. And my parents were pretty good at talking to me about the difference between a stock and a bond. Anyway, I ended up, I went to University of Maryland undergrad, and then I ended up, running a couple little businesses of my own, and then decided I really wanted to understand finance better. So I got an MBA up at Fordham in New York City. And that really led me to understand finance in a greater aspect. But I'll tell you, yes, I went to school 20 years ago to get my MBA, but back then, even it was more public markets, right? That's what they're focused on. So I only had like a mini course on venture capital and private equity, because back then, it just wasn't, the industry wasn't as big as it is now. Anyway, after I graduated, I ended up working actually in the data around investments, specifically hedge funds, private equity, and venture capital, so all privates. And so I really knew a lot about alternative investments. So again, this is like 18 years ago. And there were not as many people who were very well versed in that. And I ended up getting hired by my first family office. They were in London and wanted me to open up a New York office for them because they wanted access to the US markets, but also private investments. That was really their focus. And then from there, I was poached to hired by another family office. I moved to Geneva, Switzerland, and that was a big family office, about 15 billion. And I worked on a really big portfolio there. And then I worked at another family office and another family office. And in between then, I did a few things. Some of the family offices had passive investments where we were just allocating money to funds. But over time, also, some of the family offices I worked for were quite active. They were investing in companies, buying companies. So it gave me really broad experience. And then I moved back to the US with another family office who wanted me to run one of their startup portfolios in New York City. So I moved back to New York and I ran that. And that failed, which was wonderful experience. Actually, I've been a part of three startups. One was acquired and two failed. So failure is actually good on your resume because it means you've had a real life experience. If you've never experienced failure, then you're actually not learning much. And then, during COVID, things changed. So I used to travel the world for investments, but, that shut down and I'm still on the board of Nottingham Spirk up in Cleveland, but I ended up meeting TEDCO here in Maryland, and I can tell you a little bit more about that today.
That's awesome, Katherine. I think that for everybody on the line right now, I think that your mind might be bursting with questions, and I am too, mine as well. So just going back to, I love the history, fantastic. Coming from this kind of diverse upbringing, and then reading Newsweek magazine, learning about stocks and bonds, and then getting into your first family office. How did you even meet those people from the first family office?
And it's interesting because I got a question even for you. When did you first know what a family office was or heard that term?
Oh, it's really interesting. At Goldman Sachs, that was my first job. So I knew about them because, of course, Goldman had their family office.
Makes sense.
And so I was hired as the first analyst ever on the listed stock block desk, where every day they traded $2 to $3 billion a day. And my job, I was 19. So, they probably hired me as a practical joke, honestly. But I had to go in at 5 a.m. with your care sheet. So you looked all evening into the night about where the markets might move because someone's getting fired, there's a new patent out in this area, or what have you. But the Goldman's book was very significant. So they wanted to of course, maximize, well, all of the institutional sales clients, but Goldman's book was in that group. And so that's when I learned about it a long time ago. But you didn't hear it very often. When I went in 1994 or 95, trying to think, long time ago, I did this deck for Booz Allen and Hamilton. I don't know if I have the years correct. So just don't worry about that part. But the deck was made in Word, by the way, Microsoft Word. And what I would do is I'd draw the graphs. I'd do all the math, draw the graphs, and I'd give it to the people who did the graphs, like on some kind of special mechanism, which I can't remember what it was. And the next day I'd get the deck. But I was looking through that deck, which I still have. I guess I probably should be saying that on this call, but that's okay. But the thing is that there haven't been a lot of changes in the venture capital architecture, except for the entry of private equity platforms where they're trying to disintermediate venture capitalists. So I'm sorry to answer that question so long.
It's just an interesting question, right? Because I think back and I had no idea what a family office was. I knew wealthy people when I grew up. I was normal middle-class kid, but I didn't know. And it was like a different stratosphere for me. So in business school, they didn't talk about it. Now in business schools, they talk about it because they're a significant allocator. But, back then there was nothing about it. And it wasn't until, I graduated and worked that I was like, oh, family office. Wow. What the heck is that? And so it was fascinating to me because I was like, this is so, I don't quite understand. But, today it's a much more defined term, right? So really, what is it? Just so everybody knows, it is usually a legal entity that a ultra high net worth family creates to manage their wealth, but just not only investments. There are some family offices that do kind of concierge services. I never did that kind of stuff because I'm a finance person, but there could be family offices that are heavy on that, light on investments. Maybe they gave it all to a bank or so not all of them are the same, but usually, not always, but usually, I mean, I don't think these are hard and fast rules, but usually up to 30 million is considered an ultra high net worth. Beyond that, usually a family office, it makes sense if you want to have your own family office, really 100 million or more, because if you're going to pay for staff and all of those resources and you want it run well, there are costs associated. It's like your own little business handling your stuff. It could be your investments, it could be your mortgages, your private jets, blah, blah, blah. But, like I said, some people though, it's just for investments, and some people are there. It's not investment focused at all,
Okay, so just it's fascinating because we work with the Walton family.
Yes.
We've been very privileged to be able to do that, and we're working on some other engagements coming up here, and also the Sobrato family. So they're like in the billions, and it's fascinating to see how much work there is that they have to do to just maintain their family.
And like they probably do things very differently, right? Because none of them function the same way.
No, that's right. There's no uniformity, and that's why I find it, like, what is your secret sauce if on how to engage with these? First of all, how to find them, because they're not. For example, one of the ones that we worked with is Dr. Richard Merkin. He's done a lot of work at an X Prize. He puts millions of dollars into Johns Hopkins, and he gave us a bunch of money to run the Neuro Startup Challenge. And we're working on another piece with him, hopefully, knock on wood. But how do you even find out about these people? So the way I have done it, by the way, is I've presented at conferences, and then they've engaged me. They're like, they ask a question. So this one lady asked me a question at this one conference, and everybody climbed on top of her, when you overspeak someone. And I thought she had such an insightful question. So after I was done, I had this bunch of people who wanted to talk to me, but I kind of ran after her. It's probably the opposite of what normally happens at a conference, because I left a stack of cards there, and I said, if you would like to connect with me, just grab a card and I'll be happy to talk. But so I told her, I'd really like to have the opportunity to discuss her question further. And so I tracked her down, so she said yes. I said, why don't we sit together at lunch? And so we sat together at lunch, and then by 4 o'clock in the afternoon, I had a proposal for her, and it happened to be the Walton family. So those were, I wouldn't say, serendipity, or it was by happenstance, but also then there was this I would say that like every relationship, I ran consulting, innovation strategy consulting for about 20 years all around the world. And, even though I did growth and transformation for 50 of the top Fortune 100s, you don't just get the deal handed to you. They don't say, oh, because you work for this firm. It's really about building a relationship. But I think that's the hardest part. How do you know where's family office? Because it's a little bit elusive also for me. How do you find them, and then how do you engage with them, and how do you know who to engage with?
Well, your story is a perfect example of how they're hiding in plain sight. You sometimes don't even know, literally, because there'll be a building, right? And you'll see in the directory, and it'll say, like, I'm just making this up, but like Hill Ritchie LLC, right? Well,
right.
Who knows what that could be? But it could be a family office. You just don't know. And sometimes they're more upfront about it. Sometimes they have websites, and they might even have like to say, this is what we do, and and maybe there's philanthropy, maybe there's an investment side, And that can be a way to learn, but some don't at all. I still know some family offices who have like maybe a placeholder website, but they have no information at all. They can do whatever they want because it's their own wealth. So some of them are more active in being out in public because they want the deal flow. And also because a lot of times if you are a little more out there, then because otherwise it could be missed opportunity. If you are in too much isolation, you're not going to get the opportunity for the latest deals or interesting things. But at the same time, they want to protect themselves because everybody chases after them. Because the problem is people that, oh, family office, one, they assume they invest. I know some family offices who have like $3 billion worth of bonds and they are totally not active and they're a waste of time. But you have to find out by asking questions. So, like you had that opportunity to have the dialogue with that woman. And that's a way you do it. Now, the difference is it's not necessarily an efficient way to raise capital. Institutions, they all have websites. You know what they do. You can find, sometimes they even have all their investments published, or VC funds, right? So they're efficient. Family offices, it might not be as efficient, but they can be really big fish. But it is time consuming. It's relationship driven. So you're totally right. And you could talk to 10 of them and only 2 of them are really interested in investing in what you do, because they could invest in real estate. They could have all of their investments in the public markets. They could say, I only invest in biotech. I mean, they can do whatever they want because it's their money. As long as it's legal, they can have a full staff. They can have no staff. I mean, there are some that, like I've worked for, where I'm the gatekeeper. So I'm sent to conferences, find the investments, write it up, and then present it to the patriarchs, matriarchs, or a board, right? But there are others that it is actually the family member that's going out there. Again, it's their business. They might have a huge staff, they may not. So, it's their money. And sometimes they're very passive, sometimes they're very active. But, you go back to think about like royal families or Rockefeller and things like that. Those were some of the original family offices. So they have been around forever, but they've just been more private. You know what I mean?
Yeah, we've had quite a, I mean, what you were mentioning about relationship driven was, this lady that I met with at that conference that I mentioned from the Walton family. She went back and all the Alice Walton really liked what we had to present. So Alice made the call. So it was one family member who makes the call. So I think that that's really important to try to find the person who is going to present to the broad family. And then,
yes, that's a great point, because, sometimes the family members leave it all to the employees and they just say, here's the mandate. Don't bother me, I'm going to vote. But see, in your case, great example, a family member actually made the decision. So again, you don't know. You could talk to a family member, take them out, whatever, and then find out they're like, yeah, actually, well, I'll put you in touch with my CIO. You just don't know. So it's just, it's very different from, other capital providers who may have a whole process and, they take in, receive your fund materials or deal, and they have a process. Others, it's totally, off a decision of the leader of the family office. So yeah, and you only can get that way with asking questions, right? But you have to be polite. You don't want to say, how much are you worth? Because that's rude. That's like asking someone, well, how much do you get paid? How much do you weigh? Right? You wouldn't do that. So, I think it can make sense to say in a polite way, oh, are you interested in early stage companies? And if they say yes, you could say, oh, okay. So what stage do you typically get in? Because that can tell you a lot. Oh, I only get in pre-seed, or, oh, I love pre-IPO late stage. Okay. So you're usually in maybe the millions in the later stage, but you could be, who knows, hundreds of thousands in a pre-seed or angel round. So, gently ask those questions. It's different if it's an employee though. An employee, you can be more like, okay, what are you investing in? Okay, you don't do early stage biotech. Okay, no problem. I just do real estate. And then and then you don't waste your time,
So this leads me to some other questions too. So for example, Rockefeller and Ford, they have gigantic offices in great parts of Carnegie. We met with the Carnegie family in New York. but it was really a mystery. Even asking the questions didn't really get us in the right ballpark. We were meeting with the one from Carnegie, she was part of the family, and the ones from Rockefeller and Ford, they were part of the program management team. And so it was just, we couldn't get some transparency. So do you have any, I mean, you already said ask questions, but do you have any other suggestions on how to form the relationships when you're not able to get enough information from the meeting?
Absolutely. So, and it's interesting because some of the questions that are coming by are exactly relevant to what you just asked, Rosemary. So, there are conferences for family offices. Some of them are better than others. You're going to have to pay though, because usually families go free, and it's the typical event sponsor, and so you're going to have to pay to go to those events. But if you are fundraising, it could be useful to you. So yes. But someone asked, I don't know a specific list of family offices that invest in biotech. You can find specific lists for like venture capitalists who do stuff like that, but VC funds, but not really family offices. The only thing is there are places like, AngelList, Crunchbase, PitchBook, but that's kind of expensive, where it shows the cap table and it can show you what they've invested in the past, which is a really good indicator. I would say there are some family offices that are very interested in healthcare. However, they are worried about FDA risk and therapeutics. So a lot of them drugs, not necessarily, but then there are a few billionaires I know who only focus on that. But again, there's not like a list, but I would say if you can see who's invested in past deals, so troll that stuff on the internet. Also, I mean, there are articles, but just it takes time because it's not an efficient investor because they're not all the same. So yeah, I would do that kind of research because that can be helpful to see if they've done it in the past, because if they've invested in the past, it makes sense. But, if a family office is only associated with real estate or property, it's probably less likely that they're going to do an early stage biotech deal, because maybe that's their roots are in a completely different industry. And some family offices are afraid of biotech because they say, I don't have a PhD in staff. I'm not smart enough. I don't know. So that's what's kind of interesting. Some of them are afraid because they just don't have the technical expertise and staff, and other people hire. When I was at the Women's Venture Capital Summit in San Francisco a couple of weeks ago, I met a woman who was a doctor. She went to medical school. She realized she worked in a hospital. She's like, oh, I hated it. And now she works for a family office on their investments. So, it's like, so that is an obvious one that is interested in healthcare, but yeah, it takes a lot of time, but it can be a worthwhile investor for you.
Absolutely. I mean, we have found them to be the most that have put funding into the Center for Advanced Innovation, and also our Ignite Social Impact platform, which is like a for-profit platform. But I think one other thing that I wanted to mention was to kind of dig into what you're mentioning, which is so, for example, if you look at the Walton family, they have the Walton Family Foundation, the Walton Family Trust. They have Walton Investments. The Walton Investments come up under completely different names depending upon if it's a sons, like Stuart and Tom.
Yeah.
You would never ever put together the Stuart and Tom investment fund with Waltons. I mean, the one starts with a Z, and it's like a 3-letter word. You have to like dig in. So if you see the Crunchbase thing that you mentioned,
that's true. Yeah.
What I would say is one thought is to try to look at the 990s and for the nonprofits and see what they're doing. And usually they're doing a for-profit investment and then a nonprofit investment. So it's usually non-dilutive and dilutive. They usually do the non-dilutive one first, at least my experience, and then some dilutive. But I mean, obviously, Katherine, you're the expert in this. I'm just giving you some tidbits about what we have found that I would have never realized that that group was, and there's only two people who are managing Stuart and Tom's money. So
Yeah, exactly. And that's another great example that you can share, because they're not all the same. And you're right, sometimes there's a huge staff. I mean, I worked for one family office, there were 55 people, and then
Wow.
other family offices, there's a handful. So and I'm looking at some of these questions, and yes, Maryland, DC, of course, there's a lot of family offices. I'll tell you, interesting though. So obviously, like Silicon Valley has more tech family offices, but what's interesting about this area is GovCon. So you've got, GovCon, government contractors who've exited for billions. And there are a lot hanging around here. There's a lot of old school, like Virginia money, horse country. There is real estate money here. This isn't as, I'd say there are some startups here, founders that have exited, but it's not as, in other places there, obviously, like I said, like Silicon Valley and things like that, there are far more techies. But yeah, there are family offices in abroad who absolutely invest in U.S. startups. I mean, even though we've had issues the past couple of weeks, we are still the largest market in the world. We've got more startups than anyone else. I mean, I lived abroad in Europe for 7 years, and I invested all over the world, Asia, you name it, all over Europe. But people always want US exposure for sure. And some European, Asian, Middle Eastern family offices are investing in early stage US companies, absolutely. Because it's not that there aren't startups in their own country, there are, and they may invest in them too. But here we've just got such a massive choice. Our country culture is different. In some other countries, it's not as easy to just get a startup or form an LLC. There's a lot more paperwork and time. So the US just happens to have more startups than anywhere else in the world. So yes, foreign families absolutely invest here. And you've probably seen that too, right?
yes, absolutely. Yeah. And I was thinking, as you were talking, I was just thinking about, because half my career is outside the US. And in terms of working with these big companies like Barclays and Nokia and so on, the interesting thing is they have their strategic investment as part of the company, but they normally will have a family office next to it. Samsung, for example, does. They fund tremendously. And so that's probably another angle that I would recommend to people to see those foreign companies that want to see a birth of their product lines in the US, but they want to do it through their family office route, perhaps. But it's what, Katherine, just to go back to your point, they never operate the same way. Some are extremely disconnected, meaning the company like Walmart is not connected directly with the Walton family. When I say not connected directly, they keep a wall, if you will. They're connected with people, but there's no dictation for the Walton family to tell somebody in the Walton family to do something. So I was just adding to that, and I thought,
yeah, exactly. And some of the families have sold off their operating business. So great example, the Waltons or Samsung, great example, because there may be an operating entity, but then the family office is separate, as it should be. Now, sometimes it might even be in the same building, but that's okay, right? But
yeah,
you hit the nail on the head. They're separate entities, right? Because one is a probably public facing business that's generating revenue, and the family office investments are totally separate, because maybe they don't invest like the Waltons in consumer products only. Maybe they do a lot of stuff, right? And same with Samsung, you don't know. So they're not all the same, and they may be passive, they may be active, they may have a large staff, they may not. They may have a mandate, they may not. So you just can't group them all together, but it's a more of a long-term relationship. And it could be that if a family member, for example, if it's in biotech healthcare, maybe a family member was sick with something or has some issues, there could be a personal interest in drug development, for example. So cases like that happen too, because they maybe only invest in, I don't know, crypto, you know, or hospitality or hotels. But a family member, actually, I do know an example of that where a very, very wealthy real estate family office had issues with skin cancer and also with neurological disorders. And so they put their money into those two things and even helped form a company. So it can happen that you form a relationship with them and maybe they're really interested in what you're doing and they're passionate about it, saves lives. Another place I would look too, because you mentioned about this, Rosemary, which is so true, is look at their philanthropic or if they have a foundation. So what's interesting about that is usually they talk about the family, right? And so that could be another starting point, because usually somebody who creates a foundation is wealthy enough that they're doing their own investments and may have a family office that's separate that does for-profit investing. So that could be another clue to investigate. And then, I'd like to say there is a difference between, versus other capital providers like, angels or high net worths. They sometimes function like a family office, meaning they can change their mind. Again, they can do whatever they want because it's their own money. They may not have staff because they have a little bit less, but I've met family offices that have under 100 million that are super active and invest all the time. And then I've met billionaire family offices who barely allocate at all and have just very passive index investments. So yeah, they're just not the same, where a VC fund, they have an offering memorandum, right? A hedge fund has an offering memorandum. They have to stick with that mandate because they have shareholders who give them money to execute that mandate. Well, family office, they may not even have a mandate. So it depends. Some of them are very well organized and have a mandate, and some of them are not. So, I think we've seen them all, haven't we?
Yeah. There's quite a large spectrum of operationals, the way they operate, and also their missions. And to your point on the real estate, like the Saad family, the father likes real estate. I mean, they came over from Italy. They bought a significant portion of the San Francisco real estate empire, and they still do. And the father really likes that a lot. I mean, real estate. But the family generally, some of them like plastics, some of them like children's healthcare. They're diverse in nature in terms of what they have interest in, and of course they all have funding. And then another thing that I wanted to mention, which you're probably going to talk about, but the other way of investing is they go through donor advised funds. So
Yes.
we've received funding from the Silicon Valley Community Foundation, which, by the way, is the largest foundation in the world. It's bigger than Gates, apparently, according to my references. And those are people that are the people who are putting their money in there. So, and what's fascinating about the Silicon Valley Community Foundation is they really have wrapped up a lot of the funding, a lot of the money, excess money in Silicon Valley, so that they can deploy the money in certain ways to the purpose that they want. And there's one that we have here in Bethesda called Impact Assets. And we've received funding from them as well. Again, a donor advised fund. But Impact Assets is, it's down the street. I mean, I'm here in Bethesda, so it's like down the street from both of us, actually, Katherine. And that they have been quite fantastic. I mean, we did term sheets with them, so it was a more investment focus. It wasn't non-dilutive, but it was kind of funding coming in from a philanthropic aspect, and then what they're trying to do is recycle their money, make it an evergreen fund, so that they can continue to invest in companies that will produce funding, produce capital, produce
Exits.
yeah, exits or what have you, some kind of dividends or some funding back so that they can continue to roll in more money. So it's just a perpetual virtuous circle for funding items that are in their interest. And so, we have some examples that we've worked with some donor advised funds, which I think is a really interesting aspect because of the way they interact. I mean, technically the fund itself, the donor advised fund says, okay, well, you're going to be investing in Silicon Valley assets, for example. But the donors really do drive where the funding goes. And
that's right.
Yeah.
It's so interesting because the donor advised fund, they've grown a lot since it was, I don't know when it was first created, but it's just gotten bigger and bigger. And part of the attraction for creating one is because of the tax write-off. So what's interesting is there are normal people. You can open a donor advised account for as little as $5,000 at some places. Now, why do you do that? What's interesting, and part of the reason it was created too, was to get, frankly, wealthy people to put some assets in an account that would then be, it's usually operated by a 501c3. And then those assets can go into charitable, they can go in investments too. But it was really to motivate them, because what happens is you may not allocate immediately, but the amount of money you contribute to that donor advised fund gives you a tax write-off for that year. I'm not a tax lawyer, so work with your tax professional or your accountant, but that's part of the reason why. And like normal people can do one too, but for a wealthy person, that's pretty attractive, right? Because you're like, okay, I know, let's say you had an exit and you're like, okay, I got a bunch of money. Well, I definitely know that I want to, maybe put some money aside for fund, but and to do whatever I want, but I'm going to put some of my money right away because then I get the tax break on it, right? And then that money can be allocated over time. It doesn't have to be done immediately. So very interesting setup. And those kind of structures are helping get money from these funds into either really important philanthropic things, working with companies like yours. I mean, think about that. That's fantastic non-dilutive funding, and that allows your business to thrive, and it gives the wealthy person a write-off. So yeah, very interesting structure, which I think, and they're getting larger every day.
Okay, very good. Thank you so much for that. I have like about 1,000 more questions for you. I think that everybody else does too, but before I open it up, I mean, we have a lot of questions over here. So I just have another question that I just would love to have your insights on. So for example, we applied for a grant. So it was this person is pretty wealthy, and she created some programs, a few different programs that were really quite intriguing, and we applied for one. And of course, the application process, I don't know what's better or worse to. No, I wouldn't say better or worse. I mean, I think developing the relationship is number one, if you have the opportunity to. But if you can apply for a grant, I mean, best is to know the person before you apply for the grant, because then they send you the application. That's how it worked with the Walton family. But what do you do when you're going in kind of cold, and then there's a misinterpretation about what the person read, and they believe that it might have violated something that they put in their description of what they wanted to see? That there's no recourse really, because you're not. For this particular case that I'm thinking about, is that it took a significant amount of time to write the grant. And the thing is, we didn't have the relationships with the people, and they were unknown, actually. They were not, but I wanted to give it a shot anyway, much to my core team's chagrin. Hopefully not to their chagrin. But it always gives you collateral to use another time. But the, we are very creative, by the way, in the way we try to figure out who those people are who are managing the process. We have like we have some trade secrets in how to find out who people are, but we didn't want to dig too deeply. When I say that, I mean overstep boundaries. So I don't know if you have any suggestions on what would you do in that case, or just don't even bother if you don't really have the vast inroads.
Yeah, it's tough. I think sometimes, when you apply or you reach out to a family office, you're like, where did my message go? It's just in like a black hole.
Yeah.
And sometimes that does happen. But you're right. It's, if you can ever do a warm intro, that's wonderful. But then you have to know the person who knows them. It's tough. I would say, yeah, conferences help, look even on LinkedIn. And I read constantly. I read, the news all the time. And I will pick up names that I've never heard of in the family office space allocating to certain sectors, for example. And then I kind of write that down. But pardon me, it's just, it's really tough, but it's, there are lists out there. I saw somebody comment, but here's the thing. It's like, I've looked at those lists and looked for myself, and it'll be a job I had 7 years ago. So
Yeah.
the phone number, the email is wrong, or the people putting together those lists, pardon me, aren't necessarily financial people. So they don't necessarily ask the right questions to find out if that's accurate. So it's just a moneymaker. Maybe some of those addresses will be right. But then some people I've noticed, I literally knew a family office who went to conferences with 2 business cards. One was the one he gave to people he didn't want to be contacted, and the other was the card he wanted to be contacted by. Luckily, I got the good card. I know. I mean, to go to all that effort to print out fake cards, but literally it was like off by a number. I mean, like by a letter. But I was like, wow. But it's because he got so bombarded. So what happens is that they publish these books, maybe as somebody's email. I mean, sometimes they literally change their email because they get bombarded by stuff. And they'll say, like, they'll be like, oh, invest in my gold fund. And then someone else will say, oh, I'm actually, selling land in Idaho. I mean, and what happens is the family office person shuts down. They just don't answer anybody. So that's part of the problem, is how do you cut through the noise?
Yeah.
Learn what they do. And if you can't find anything on them and you get the opportunity, ask very polite questions, but it's not easy. They are opaque by design. Some are open for cold calls. So one of my other family office jobs, we had an enormous amount of money to allocate. And so we were out there. We went to conferences. We tried to get interviewed. We just were out there because we wanted deal flow, right? So those are the family offices that are going to be more receptive to you. If a family office is super secretive, super hidden, I mean, how much time and effort do you want to waste on them? That's another thing you have to think about, because how many venture capitalists are out there, or firms that at least they tell you what they do, so you are appropriate for them.
Right.
Because chasing a family office, which, I mean, they could go on their boat for 3 weeks and they don't care about you, and you've wasted all the time and effort. So that, it's a balance, right?
Yeah. I mean, it's very difficult even for family offices, I think, to plan their vacations. I mean, it's quite an ordeal.
Yes. And they have different lifestyles than we do. So, depending on if they have employees or not, the employees might be there and they might be actively working on deals. But sometimes if the family members aren't there, everything stops because they might make the final decision. So yeah, it's your deal may be time sensitive, but they just might disappear for a little while. So you've got to factor that in too. Institutional investors, not always, but more often than not, have a process, and at least you can understand their process. And hopefully if they're polite, they'll get back to you, even if it's a no. But it's frustrating because you get ignored, right? And you're like, well, do I email again? I don't know. And now after COVID, we used to have phone numbers, like of someone's office. Now so many people work from home that's kind of gone out the window. So you're like, do I email again? I would say this, everybody, every human being, I've had this where I miss an email, right? So there's no harm in following up. Don't be annoying. You can be persistent, but after like 3 emails, if nobody is answering you, you might want to give up. I have heard that in marketing, you need 7 touch points before someone will invest. So that means emails, that means phone call, that also means maybe an office visit. But, I would just say that also, don't write me a novel. I don't.
Oh, no.
5
Yes.
pages. Yes,
Yes.
you've seen
That
that,
is
right?
like saying, that's like do not do that.
Yes.
That is like the kiss of death.
I mean, bullet points. What are you? Are you an early stage company? Great. Say that. I mean, we are an early stage company focused on blah. We are whatever, because what happens is someone goes, oh, because then like I would read through and go, okay, check. We invest in that, or I'm a hedge fund that only invests in technology companies. Okay, well then you know what they do. So those kind of 5 bullet points that give the basics, like what you are and what you do, and you're raising money for Series A. Because otherwise I don't have time for that. And then I'm like, okay, that's an email I'm going to look at again. So efficiency, and you can have attachments. I'll tell you something that's fascinating. So you and I are obviously spring chickens, but apparently older people don't like clicking on links because they're afraid, and it's true. So younger people, millennials, in an email, if there are links, they will click it. Older people want attachments. And they're suspicious because we're all told, phishing emails, blah, blah, blah. So that's what's so interesting. I got to tell you how many times I've sent a link, because, some people, and a lot of you here, when you have a pitch deck, there are like doc share where you have to put in your email address. Frankly, some people hate that. Now, on the upside, there's downside and upside. On the one hand, you want to know, did anybody even open my presentation? Because, right, they capture the email. However, we may need to send it to 3 other colleagues, or if you're in a family office, the CIO or whatever. And so they don't necessarily want to give you their email. They don't want to put in the email in the doc share. So that's difficult. But then you have to be careful because you don't know where your presentation is going to end up if it's an attachment. So maybe be careful and not put anything proprietary in there. Make it enough that it's a tease so that they want to contact you. Because like you've seen that before too, right? It's like, if it's too long of an email, no one's going to read it. They don't have to.
I feel sorry for Cody because I send it to Cody and I say, what does it say?
I wish we all had a Cody.
I know. I do feel sorry for him
PhD.
though, because like he gets all I'm like, what the hell? This email is so long. And I don't have. But he I don't know, he's got some magic pixie dust he puts on it, and then he sends me that 3 words that I need to know.
Well, I mean, if it has a virus, Rosemary will just give me another computer. It's all right. We'll figure it out.
But yeah, it's funny though, right? It's like, I mean, be efficient, get to the point. Because sometimes, I mean, a lot of times I'll write back to people. I'll be polite and say, actually, we don't invest in that. And they're thankful because then it's like, okay, then I can move on. Like, I mean, I'm a professional too. I'm not a family office. I hope maybe if I'm lucky one day I'll have my own family office, but I've been an employee, and employees need to work on the investments in the portfolio. So sometimes they're actively looking for investments and they'll be receptive. But I also know what it's like to fundraise. I've had to do that too. And I know it's such a pain. So that's why I try to at least polite most of the time. And just, even if it's one set, no, we don't invest in this industry. Thank you very much. And then, I think family offices could do a better job in that. And so, because otherwise you feel like, did they even get it? It's like my email went into a black hole. What do I do? So they should be more receptive that way. But a lot of times they're not, because they're just overwhelmed. With people trying to get their money, everybody, banks, service providers, you name it. And sometimes they just get fed up.
Fantastic. Yeah, I can understand that. So I'm going to go back to a couple of things you mentioned, Katherine, that I put a pinpoint on. if you all have ever heard of Mad Libs,
Yes.
so you can just do a Mad Libs, use GBT, put in your 5 things that are about your company, ask GBT to generate the 3 sentences that you need. Say, generate 3 sentences that equate to what you are, what you do, what you want. And
Exactly. And the structure. So some, like, for example, some people only invest in funds. Some people only invest in companies. Some invest in both. But structure matters. Some people don't like safe notes. Some people like will invest in an SPV, right? So that structure does help too, to know. So it's like, okay, it's a direct investment in this kind of company, this round, I'm raising this much at this valuation, or it's convertible note, blah, blah, blah. Be clear. And we are, you know, a medical device that does blank. This is what's unique about us, X, Y, Z. Don't give me 3 paragraphs of why you're special, because that's in your presentation and that is what you should do on the call. But enough to tease that person to then pick up the phone and have a call with you, you know, that's what you need to do. So yeah, I think, and pitch deck, yeah, attach it.
oh, Katherine, I have to also mention what you mentioned before about the click on the links thing. I mean, obviously it pounds all over that. I mean, that's what people do it for. They want to see who clicked the link and when they click.
I don't blame them, right?
Yeah, of course. Yeah.
I mean, it's like, if I am fundraising, I want to know who clicked on that link and looked at it. But it's just, it gets lost in emails. And literally, I was on a call yesterday and it was a family office. And so I was, I'm on the board of a fund based in Europe, and I'm on the board of a DAF in Utah. And so we were talking about that with a family office, and the person I was with from the fund put the, you know, presentation up on Zoom, and the family office said, "Oh, I've never seen this before." And I was like, no, it was in the link, you know, it was sent to you, but they just don't see it. So I'm just saying,
Yeah,
you know, think
that
about
happens all the time. That happens all the time.
Yeah, they just don't see it.
They don't see the link. No.
Yeah, and it's just a pain, and it's a matter of, and that's another thing too. The majority of people, listen, there are tons of rich young people, I know, but the majority of people who are organized enough to invest or have a family office are probably a little older. Same with the employees. Most of the employees might be a little over. Nobody goes to a family office to be trained. They're not going to train you. They only hire people that already know what they're doing, because, you know, there's no training program like at a bank, right? Like Goldman Sachs, like, you know, there's you know, there's a lot, not just them, but that have banks that have 2-year programs, right? A family office wants you after that. You know, they're not going to train you. They don't have time. They want what they want done. So it's usually older people who are looking at all this stuff, and a lot of them prefer attachments. So that's just something to think about, you know, not that there's tons of wealthy young people, but not all of them are that organized yet, you know.
All right, Katherine, thank you so much for many, many, many valuable insights. We have 22 minutes, sorry, and I have more questions, but we have 25 messages. Let me just scroll through here.
Yeah, there were some good questions there, and I just happy anytime to get on here and speak with you. You're so much fun.
Oh, thank you so much, Katherine. I have so many questions. You are just unfussable. You've provided extremely valuable insights. I mean, you can't get anything better than Katherine Ritchie.
I don't know about that. Well, Mission Barbecue.
Oh, Mission Barbecue. We were talking about that before everybody got on the call. So if you haven't had Mission Barbecue, you know, but we have, so what I could do, Katherine, is since we only have a minute left, and I want to respect your time and everybody else.
I'm okay to stay a few minutes if there's any important questions, but.
Okay, let me scroll through real fast, and everybody look at the messages. Does anyone feel extremely passionate about one of their questions? Oh, I see Sandy, you're raising your hand.
Yeah,
Can you-
I just had a quick question. I had heard that there is a large net worth directory of people, and it's not widely circulated. And even if you have that, you have to be introduced by somebody. So the question is, how do you get access? How do you get introduced?
Well,
And are there specific people who are interested in not 8x, 10x, 20x, but reasonable margins because the startups are related to human health or related to global issues like sustainability, environment, and affect humanity. So how do I get connected?
yeah, that's the tough part. So a lot of those lists, I may mention this before too, you know, they're old. They're not necessarily the most up to date. I mean, here's the thing. Why would I want to give my name to a publication where then 500 people the next day are emailing me?
Yeah.
You know, so no family office volunteers to be a part of those things. They just don't. I don't want to be on lists. Plus, sometimes again, it's like they're old. It's a email that was a long time ago, or they'll have like, you know, the secretary or someone inappropriate as the email. So I don't trust those. I mean, it's just not that easy. There, you know, I think if you look on LinkedIn, if you know, are doing searches for family office websites, that's probably more worth your time, because some phone book with emails and phone numbers, it just, I don't, I never trust those. And
Agreed.
yeah.
Here's what I have done one time, which is it actually worked. I went and found out where the person lived, and I sat on their porch. Of course, they have cameras. Who is this person? Cody that had never heard this story before, so she's probably wondering.
A little shocked.
Yeah,
So good.
But well, I mean, the thing is, I was just wondering if, you know, I didn't know if they were still alive, or I mean, so I mean, it was just to say hello, and I mean, if they wanted me to leave right away, I would of course left. But they said they came out and shook my hand, and we had I asked for 10 minutes, and then it turned into more than an hour. So it actually turned out into something very good. It worked out.
I
But
would say,
that's an extreme thing.
yes, be careful, because you don't want to look like a stalker, but see, you're charming and so smart and everybody loves you. So of course they invited you in. But yeah, I just, I feel like those directories, I mean, and again, it's like, so what, you have an email, but do they even invest in what you're interested in? You know, I mean, it's, I think, better to do your homework and research and find out if they're even investing in that area, because there are enough family offices that you could chase after that already have biotech investments.
Yeah.
But it's not going to be easy for you. There's just not a list, you know, and that's the thing. If it was that easy, everybody would do it. So.
And Katherine, you said something earlier about being tenacious, about reading, about like, if it's hot off the press. Oh, I noticed that you're invested in XYZ.
Exactly.
And then you can do some correlations. And by the way, that's what the wonderful thing is, that you can, I keep going, like ChatGPT has become one of my friends, because you can ask the questions, because they're constantly consuming data. You can just,
Yeah, that's true.
you can just ask it, you know, I noticed XYZ was investing in this thing. And then of course you look at the 990s. I mean, you got to pull up the 990s on GuideStar and then see other things they're investing in, and to see if it's not an anomaly. Because remember, you were mentioning, we were both discussing before, some family members want to do X and some family members want to do real estate. And so you can't put them all in one bucket. Even one family, they're very diverse in terms of their interests.
Oh, that's someone else's phone. Yeah, exactly. Because it could be that, you know, the grandfather invested in oil and gas, but the granddaughter cares about impact and says, nope. I mean, you know, I remember I was listening to a webinar, and it was actually Ted Turner's granddaughter who was against deep sea drilling. And it was just interesting because, you know, and that could be a totally separate pocket of money that she controls and she invests. So yeah, it's a very opaque, investor base, there's a ton of money hidden in family offices. And the thing is, you're right, just as you said earlier, like you were talking about maybe the Walton family, for example, and, you know, one of their entities is like, you know, like I've seen, you know, like I could have the KHR LLC. I don't, but, you know, let's say that was my investment entity. Well, you're right. It's very difficult to see actually who
Who's in there.
Yeah. But,
Yeah.
but
I mean, like Thomas Stewart money is totally, I mean, the only reason I know about it because of the connection with the Walton family, but the investment name, there's no way you can connect the two. And then you have
yeah.
the gatekeepers, and the thing is, you have to meet the gatekeepers in person.
Yes,
They
yes.
have to like you and know that you know what you're doing.
Yeah.
Oh.
Now, when you know, there are brokers out there, and especially when you get, your company gets larger, there's fundraising and there's investment bankers, and all those players can help, but, you know, they need to get paid, and rightly so. And some are better than others, but, you know, that's a whole industry too, is the capital introduction.
You know, read constantly, read the Guide Stars. I'm not afraid to cold call. So I got an engagement with the Kauffman Foundation through that, you know, I did it. That was 7 times, by the way. And I sent a deck, got a call with them. They gave us an engagement. That was Kauffman Foundation, you know, and we already talked about some of the other ones we've gotten. So know if you're appropriate for them, like do some research, be timely. You know, if you're doing reading constantly and you see them doing something, then maybe you can further boost what they're interested in. Ask questions, email and phone call. Don't be annoying, but be persistent. Think about Mad Libs, the bullet points. Use GPT. It's like fantastic, and then it'll correct any grammar mistakes you have too. Other people do that for me too, but you know, make sure you talk about what you are, what you do, what you want. Put attachments on there. Remember, people don't want to click links sometimes. Make sure you identify how you're differentiated, but don't put 5 paragraphs in there. You know, make sure you're creating some value. You know, any touch point you have, I would always say, if you can create some value in their day. Let's say if they're in San Diego and there's a festival coming up and they may not know about it. It could be interesting. You know, like, oh, are you going to go to this particular festival? It's coming up in San Diego, and I see that you're there. You know, things like that would make a difference. All right. Thank you again for your time today. I appreciate your joining.